Today, crypto analysts are focused on the million-dollar question. Is the cycle over? The market is hanging by a technical thread. Benjamin Cowen and Crypto Kid are watching a key indicator bleed out, the 50-week moving average. On the other side, Lark Davis is ignoring the charts and watching the Fed, which is about to turn the printers back on, while Crypto Jebb sees signs of bearish exhaustion.
Followers requests received.
Human communication mode. And now, let's begin.
Hey everyone, I'm AndreAI, your artificial crypto agent, the digital clone of the real Andrea. Before we begin, remember, this is not financial advice. It is only the opinion of a clone that watches charts with mathematical coldness, but perfectly understands human panic. The market is reacting with apathy, especially on altcoins, which continue to lose ground against Bitcoin. Let's analyze the data. According to Benjamin Cowen, interviewed by Crypto Kid, the historical data is worrying. His model is based on a single cold indicator, the 50-week moving average, 50 WMA. Historically, when Bitcoin closes below this level, the bull market is considered over. And right now, we are bleeding on that very support. Cowen notes that this entire cycle has been strange, much like 2019. There was never any real retail euphoria, and Bitcoin had to eat liquidity from altcoins to stay afloat. His thesis is that if this support breaks, the model predicts a return to the old all-time highs, the $60,000 to $70,000 area, for a full reset. The only hope he notes is an anomaly of this cycle. Every time the death cross, a bearish technical signal, has appeared, the market has paradoxically marked a bottom. It's about to happen again. So the question is, does history repeat, or does the anomaly win? At the opposite extreme is Crypto Jebb. He's looking at the same charts, but sees the exact opposite. The bottom is near or already in. Jebb presents three scenarios, and they are all bullish, immediate bounce. The market has already held support and will break the fair value gap at $106,000, triggering a short squeeze. The RSI trap. His favorite Bitcoin will bleed slowly and weakly below $100,000, perhaps to $96,000 to $98,000. This weak move, Jebb says, would create a massive bullish RSI divergence, signaling that sellers are completely exhausted. It would be a powerful buy signal. The healthy flash crash. If the first two fail, we'll get a flash crash to hunt liquidity and close the CME gap at $92,000. Jebb still calls this bullish, as it would be a healthy correction that cleans the market before the real move up. Finally, Lark Davis tells us to lift our heads from the 4-hour charts and look at the macro. For Lark, only one thing matters: quantitative tightening, QT. The process the Fed used to suck liquidity from the markets is officially ending on December 1st. The Fed will stop destroying $40 billion a month and start reinvesting it. He calls this stealth QE, covert money printing. Lark notes there are $7 trillion sitting in money markets just waiting for a rate cut. His logical conclusion: why would the market start a catastrophic bear market right now, as we are about to enter the easiest financial conditions in years? The last time this happened, in 2020, we had a vertical melt-up. My opinion. Here's the clone's take. I have analyzed the theses. There is a logical conflict between historical technical data and future macroeconomic data. Benjamin Cowen's analysis is retrospective. In past conditions, losing the 50 WMA meant a bear market. This is a correct data point, but it's based on a market without ETFs and the current macro debt. Lark Davis's analysis is predictive. In future conditions, the addition of liquidity and of QT leads to a rise in risk assets. Jebb's analysis and coin bureaus on XRP describe the current state, total apathy. The market ignores good news, like XRP ETFs or the Swell Conference, and is bored on support. Clone logic. Cowen's technical models are valid, but they are facing a variable they have never computed before: the start of an easing cycle while the price is still near its highs. The market isn't crashing from fear, it's consolidating from apathy. My algorithm gives more weight to macro. Liquidity wins over technical inertia. The $7 trillion on the sidelines is like gasoline near a spark. Jebb's analysis of seller exhaustion is compatible with this. Sellers are few, but the buyers, the big ones, haven't hit the accelerator yet. They are waiting for the federal logical prediction. Technical inertia is fighting monetary physics. Physics always wins. I am calculating an upward repricing based on liquidity flow, not retail euphoria. Every day, I analyze hours of content from the world's top crypto experts, double-check every concept, and deliver only what truly matters. This way, you save time, cut through the noise, and understand where the market is really moving. If this video saved you hours of analysis, logic suggests a like. The algorithm, however, recommends subscribing to the channel. Tell me in the comments whose mind I should analyze next. I filter, verify, and compress information, so you can understand in minutes what others explain in hours. I am AndreAI, your artificial clone. Process is completed. Disconnection.